so they can follow along in the discussion. And those that are watching on screen can see it because we'll share the screen.
Sure. You want to send it to me and I'll email it out?
I think you have it, but I'll send it again.
Oh, I do have it. You're right.
It'd be good to have either way, Chris.
Okay. Yeah, you're going to all get it. I had given it to Larry.
And if you just want to remind everybody to mute unless you're the speaker, so we don't get feedback.
There we go. We're out of here.
Okay, so let's get this list.
Oh, you want to be on the screen?
Yeah. Open it up. Hello, Larry.
Yes.
Randy Mathai from Mathai Material Handling.
Hi,
Sorry about
Randy. How are you doing?
I'm excellent. Thank you. Had a few technical difficulties.
Can you see the screen okay?
I can.
All right. I'm in the process of.
This is different. I have no idea.
All right. We'll be getting started in a few minutes. We're just making a couple of, sending out a couple of emails for, to download the deck to you guys. So.
Okay.
And then Larry, I'm not sure, are you going to do it or are you going to have me share my screen?
I'm going to have you share your screen.
Okay.
And as I said, I'm sending these things out.
So when I put it on PowerPoint, I won't be able to see the others. So I'll assume that you'll take any questions, or if somebody has a question, they'll stop.
Yeah. What we'll do is I will monitor the chat and the questions, and then we'll take it from there.
Okay, great.
I should have sent this out. I didn't even think about this, to be honest with you, Chris.
Okay.
So. Okay, I think everybody, probably except for Tony C's guy, where do you have an email?
Yes, I do. You can send it to Tony
Okay.
but I can see the screen.
Okay, great. All
What
right.
what are you seeing on the
Thank you,
screen?
sir.
So Chris,
Right now, I'm seeing Larry.
okay.
Got it.
So,
Okay, great.
so Chris, I'm going to, I'm basically going to turn this over to you. We have 11 people.
Okay, great.
And so I'm going to have you, okay, so, let's see, then sharing option. Okay, Chris, you should be ready to go.
Can everybody see my screen now?
I can.
Yes.
Perfect. So Larry, do you just want me to kick it off or do you want to say a few things first?
Well, I'd like to, first of all, say a couple of things to the group and sort of introduce you there, Chris, because we have, I can get this thing falling over. Chris, you know, our speaker today, Chris Ellith, is the founder and director of SC&H Capital. And he has over 30 years experience in the investment banking arena, representing both publicly and privately held companies. His consulting practice concentrates in many areas: corporate divestitures, acquisitions, raising debt and equity capital, strategic planning, business valuations, and transaction advisory service. Now, Chris is a frequent national and regional speaker. I'm very honored to have him here today. And he brings a depth of knowledge. He's taught at the MBA. He's taught in the MBA program at Salinger School, which is at Loyola, Salinger School of Business, which is at Loyola. But he taught, developed the curriculum, hired the professors for at Carey School of Business, which is John Hopkins, on, I believe it's strategic management that ties almost everything together that they learned throughout the years. Is that correct, Chris?
Yeah, in the MBA program, yes.
Yeah. So when having Chris here today is an honor. And Chris, thank you for taking your time and sharing this knowledge with us today.
Great. And folks, what I'd like to try to accomplish today is to be an educator and to provide some slides where I can provide context and then welcome your questions, because just to listen to me for 60 or 90 minutes will get boring. And I really want to make sure that you taking your time today, we're addressing and answering questions that you have, whether or not they're on the screen or not on the screen. As Larry said, I taught graduate school for 20 years, so I'm very used to getting asked questions that aren't even in the realm of what's on the screen. And what I have traditionally found is entrepreneurs have lots of questions, and once they have their answers, they're better prepared to think about how it applies to their business. And so if we could do that today, that would be great, but I'm willing and open to answering any or all questions that you might have. Is that a fair agenda?
Fair agenda.
Perfect.
Fair agenda.
So-
We have a couple people that I guess Bronson joined today. Bronson, you want to introduce yourself as everybody else has at this point?
Okay, no problem. I'm Brunson Cooper, owner of Corner Construction Group. Larry and I have known each other for a few years now, Larry.
Yeah.
Yeah, so we're a general contractor, Prime GC. We do small base buildings, office fit outs, car dealerships, schools, you name it, retail, Starbucks. We're around the area, and you know, if you need any contracting services or building services, we can help you either from start to finish. We provide turnkey solutions, and happy to meet everybody, and appreciate you inviting me to this also, Larry.
Thank you. Thank you. Well, go ahead, Chris.
So Larry had asked me to talk a little bit about building value in your business. And there are so many components to what makes up values. So what I wanted to try to do in the beginning was to give some fundamental thoughts and ideas on what are helping to create value, then dig in with what somebody would be looking at if they were investing in or buying your business, because I think that's where the value traditionally comes in. And then to take you through if and where you've built that, how do you then articulate that to somebody that you're trying to maximize your value with, and give you some thoughts and ideas on how to do that based on my 30-something years of having done this in the market. And again, I want to keep this very high level and very educational for all of you. So again, I welcome your thoughts, ideas, questions, etc. So let me give you a quick idea of what's going on in the M&A market, which is really what's driving value. And the data that I'm going to show you is actually through the end of June. So it does incorporate what's been going on in our post-COVID environment. And the reality is there are many factors of the economy that are still chugging along and doing things, and M&A is actually happening. As I was telling Larry, and I can now, Larry, although confidentially tell you that we closed a deal in Frederick yesterday with a private equity group out of Chicago. And so I can tell you that this is now our 6th or 7th deal we've closed this year. So deals are getting done. I'll tell you where they're getting done, and even more importantly, where they're not getting done. So the next slide is going to be a lot of data. And so I hope that you're looking at the screen and or the next couple slides, or that you're looking at the email that we sent out. The first and top slide is what is going on in the US relative to annual M&A activity and the dollars that are being spent. And what you can see from 2013 through the entire first half of 2020. So again, this data is only 2 weeks old. You'll see that there was, for the most part, from 2014 through 2019, pretty stable, although a little up, a little down, pretty stable M&A activity. And then we get here to the first half of 2020, and you see a precipitous drop. And what the numbers are that you're seeing there in the gray were what the first half of 2019 looked like relative to the first half of 2020. So you can see that we're down about 30% year over year in that. And the reality is, since COVID hit, say the middle of March, yes, dramatic drop off. Some estimates would tell you that M&A is off by 85% in the US market. But what's really intriguing as you look at the box down at the level below is that valuations have held up relatively well. So the connotation of EV over EBITDA, and again, I will apologize. I will assume that some of this might be new for you. And if it isn't, I apologize, but I certainly don't want to glaze over something. That is economic value divided by EBITDA, which for the most part is your cash flow. And what you can see in the entire US market, all the way back to 2013, the deal values have held between 9 times and just about 10 times cash flow on average. And in the first half of 2020, they were 9.4. So to tell you that values have held is a true statement. The reality, and you can see in the notes there on the right-hand side, they have been impacted based on company performance in certain sectors. And the real reality is that the banks have greatly tightened the credit markets, and in some sectors have actually closed them off due to COVID. And if you watch today, Bank of America announced this morning that their earnings will be off by over 50% this year because of the bad debt expense that they're having to prepare for, with the number of businesses that they believe will either go bankrupt or will not be able to pay their bills. So what I will tell you is it's almost a tale of two cities, if we quote Mr. Dickens, that there are many aspects of the market that are still doing well, and we'll go through those. There are many aspects that are suffering. If you're in the hospitality or the trade show business right now, where it requires people to travel, stay in hotels, as we can all imagine, that is not really doing well. However, if we were to look at things like IT, software, food distribution, and in a lot of cases, consumer products, those valuations have actually increased, and the demand for those types of businesses have actually gone up. The real key here is that, and we're going to talk about this a little bit, is what we call committed capital. And if you think about the money that is being used today to buy businesses, which in effect create value for the business owners, are really coming in multiple pools. You have public companies that have their balance sheets with their lending and their stock that they can use. You have private companies that have built up wherewithal with their banks or with the cash that they have on their balance sheets. And then you have the concept of private equity, which for many people was a new phenomenon back to when Mitt Romney ran for president. And there was the whole piece of how did you build Bain Capital and how much money did you really have? Private equity has become ubiquitous in this market. And one of the points that we would highlight is that private equity has committed capital because insurance companies and pension funds have given them their money to spend. And today we estimate that that committed capital in the US market alone that has to be spent is somewhere between $1.5 billion and $2 billion of capital looking for a home, looking for a place to be spent. So that in effect creates the need for those funds to find businesses to buy and to buy them quickly, or else they have to give their money back to those investors and in effect stop their ability to be a fund going forward because they have proven that they can't be successful. Are there any questions on this slide before we were to move forward?
Okay, so there we go. Join your visit. Had to fill out phone number.
Okay. So what I tried to do is to grab a bunch of different industries, not knowing who was going to be on the call today. I have no idea who any of you are. Show a couple of things,
So much.
give you some concepts and ideas. Somebody's got a little bit of background there.
Yeah, Chris, if you just ask everybody to mute other than you.
Okay, if everybody would mute their phone. There. Can everybody hear me? Larry, can you hear me? Yours is the only face I've got. Okay. So what I tried to do was to grab a bunch of different industries to show you a relative trend of what's going on in the markets. And again, the data that you can see through 2020 is through the end of June. And so we have materials, resources, financial services, business to business, information technology, energy, healthcare, and then the B2C is the business to consumer. And so I'm going to highlight 3 of those today to give you concepts of why these are happening and what's happening, because it'll start to give you a concept of how the markets are valuing industries before we even get down to businesses. Healthcare is the largest industry for spend in the United States, bar none. So whether that be hospitals, physicians, dentists, biotechnology, pharmaceutical, et cetera, it's all healthcare. And what we actually saw was a dramatic decrease in M&A activity in healthcare in this first half. And I think the fallacy for so many people was that you saw hospitals filling. You heard people telling you that the need to not have you be in a hospital was critical so that those that got sick could be taken care of. Where in reality, what happened were those segments of the hospitals that could contain and deal with people who had COVID, whether it be ventilators, ICUs, et cetera, actually precluded the general population from coming through the hospitals and utilizing healthcare in this past 100 days. So as an example, and I do a lot of work in the healthcare space, multiple hospitals just in the state of Maryland alone over this year and into next year will now lose hundreds of millions of dollars because the patient flow was not able to occur. Certain segments of healthcare were not able to see patients. And even though we're coming back through things like telemedicine, the concept of healthcare has been dramatically changed and affected. And the unknown piece of COVID going forward continues to put a strain on healthcare. As you could imagine, though, information technology has actually rebounded. Right there in the beginning, I think everybody feared, oh my gosh, what's going to happen? But through things like we're doing today on Zoom and other information technology platforms, we're starting to see the ability to utilize the internet and different types of platforms to actually keep the economy moving, to keep people informed, to keep employees productive. And what you're actually seeing is a dramatic increase now from an information technology standpoint as it relates to value for those platforms and that technology that are actually providing value. Just because you do information technology doesn't mean you're more valuable, but the ones that are doing that are actually making a difference. Where here before you would think consumer retail, or I will just call consumer products, were not always at the top of the food chain, you saw very quickly the consumer products took off. And even in the Wall Street Journal this morning, it was reported that just in this last period, consumer retail spending was up 7.5%. So in that regard, what we're seeing is the consumer's power is actually very dominant, and the need for things like food, beverage, and logistics are still very, very strong. And we'll talk a little bit more about those. And I can answer again any questions that you might have. But looking at companies that are involved in the consumer business, those that were in existence and those that have morphed into becoming consumer-based product are actually doing very, very well. And more importantly, we are actually seeing a great number of buyers, both public companies, strategic buyers, and private equity backed, demanding companies that provide to the consumer what are seen as, and this is important, as staple items. Those things that consumers absolutely need versus discretionary items, those things that they'd like to have. So if you're in the Rolex watch business, that would not be a staple item, but many items that you would see, whether it's poultry or meats or breads or toilet paper, paper towels, things that people need, automobiles, things related to automobiles, and et cetera, are really doing very well and will continue to do well even in this COVID environment. Any questions on this slide? And Larry, I assume you're monitoring the questions.
I am. And Chris, one of the things, we had a question. One of the things that, so these are the industries that some of our participants today would look at if they're looking to, find business. I mean, if they're in the restaurant business, probably, if they're in restaurant servicing or remodeling, probably not a good industry to count on. But on the other hand, if you're looking at a company that's labels and things of that nature for food, probably a great opportunity to see if you can be part of the growth.
No, absolutely. And I would even highlight to you, if you are in the manufacturing business, I just did a series of 4 podcasts with 4 Maryland-based business owners that completely pivoted once COVID hit, and all 4 became very different enterprises as a result of COVID, but are now actually more valuable than they were before because of their ability to fill needs that weren't being filled, and they actually changed their business models to make that happen. So Larry, if people would like me to go into a little more depth of that, I'm more than willing to do that. But again, I apologize if I had known what everybody's industries were, I might have been more specific, but I'm more than happy to answer any direct questions relative to industries. And especially if I have the answer, and if I don't, I'll get it for you and get back to you. So let's talk a minute about what it really means to build value on that platform. And I think it's important, and I'm going to use my educational background. Let's get away from thinking about your business for a minute, and let's think about a business that you might actually think about that actually does create great value and the market has seen as great value. My guess is all of you might know this company, little company based out of Seattle, Washington, called Amazon. And if we really think back several years ago, if you remember, Amazon sold books. And it was through their ability to garner and gain customers, learn about customers, and then learn about what customers needed that allowed Amazon to morph into the business it is today. But even go deeper and think about the morphing that Amazon has done even in the COVID environment and the deeper and deeper it's gotten. So this is where your ability to think about your customers, to think about your prospects, to think about what it is that you offer today, but what you are capable of offering tomorrow, and finding ways to drive value and be different than what others are doing to meet a consumer need. And by consumer, it could be business or individual, is the dramatic impact that I think COVID has taught all of us, where traditionally trends and ideas could take multiple years to morph. COVID forced us within 30 days to morph immediately, and many businesses to have to completely do differently than what they did before, whether it was based on their employees, their supply chains, or their customers, to be able to meet and deal with what that was. So if we think about Amazon as that paramount piece, the next slide I'm going to go through, I really want to take some time with you on because there's a lot on it, but I think it will help you to understand how the component pieces really do fit together and how you really do have an ability, even in a fractured market, to create and drive value as you go forward. This is a slide that we've built over years to try to help business owners like yourselves think about what actually drives value, where should I be placing my time and effort, and how do I make sure that I build something that's sustainable, that somebody would ultimately want to buy, or somebody, a family member would want to take over, whatever your ultimate goals would be. So in the blue box up in the top left, so oftentimes everybody starts hearing things at the golf course or at the restaurant. Oh, I sold my business for blank, and everybody talks a good game. But at the end of the day, your business has to have the ability to generate earnings, or its value is going to be greatly diminished. And then it's where we go from earnings that really create the ultimate value that you bring to the market, that you bring to your employees, that you bring to yourself, that would make somebody say, hey, I'd like to pay you X for that, and actually you achieve the value that you are trying to deliver. And so what I would tell you is, down in the bottom left, competitive positioning is such an important piece of the puzzle on how you allow yourself to be seen and how you can actually morph and change and become more valuable, especially in these times of change that COVID has provided. So as Larry had indicated, if say before you were doing work in the restaurant space, that doesn't mean that restaurants are going to come back or that you need to sit and wait for that to happen. One of the entrepreneurs that we had interviewed was one of the largest providers of poultry to the institutional markets, the restaurants, the hotels, the convention centers, from Boston to Richmond. And when COVID hit, their sales dropped by almost 80%. So they quickly had to pivot. And where they actually were able to pivot was to find the channels in the consumer channel, whether it was convenience stores or grocery stores or even food wholesalers who went retail, that needed more product, because all those people that were going out for dinner now were going to be cooking at home. And what most people didn't understand, 50% of all protein producers in the United States, scary fact, are actually owned by the Chinese. And many of those workers were finding themselves affected by COVID, and thus there wasn't the ability to deliver enough of that protein to meet the demand. Today, their sales have far eclipsed where they were even before COVID. They now have retail brands, and they're actually stronger and more viable 100 days later than when their sales actually took an 80% hit. And so where that really takes into play is you've really got to think about, what is it that I do today? What are my real competencies? And the hard thing is, what could I do? And where is there an unmet need in the market that I can take advantage of to actually create longer term value in this new environment? And where I find my time with entrepreneurs is getting them to think out of that box. And I know Larry and his team really work with clients, helping them think about, what are you selling? How are you selling? Who should you be selling to? And I would tell you that that's probably the biggest and greatest thing on this board that you need to be thinking about, is just that. And then it can take you up into areas like your customer base and revenue visibility up in the top. Do you actually have relationships that can be long-term? Are they diversified? Can they create the ability to withstand changes in markets like a COVID, like something that may come along that allows you to be stronger as a result of that, because your competitors cannot be? In the middle, your management team, the ability to have people on your team that are willing and able to deal with change. We all know change is very, very, very difficult for humans. They get into ruts, they get into things that they do, and they do those things well. But you having a management team that has the ability to change, to pivot, to see customers' needs and understand customer needs where they may not have been before, allows you to do things like have growth potential, allow you to be able to do things like scale up your operations. And so the reality is, whether you're using technology or intellectual capital that we show there on the right-hand side, your management team, your competitive position, and the customers that you have are the real drivers of value. And then you can go down to the things where, out of your control, the capital market conditions and industry growth, excuse me, you have no control over those, but you do have control over what industry you participate in. And if here today you were to think about capital markets, even the Wall Street Journal reported this morning, we are now in an era where mortgage rates, as an example, are the lowest they have ever been in history. And the New York Stern School actually produced and went back to the beginning of time and tried to go back and say, what were interest rates since the beginning of time? And I know you think, gee, in Greece, what, at times when there was nothing, but they actually went back and they've actually shown that the capital markets of today are the cheapest money that have ever existed in the world at any given point in time. So access to money, as I had talked about earlier, is not a limiting factor. It may not be at the corner bank right now because they may be scared, but there is money available, and it does allow for huge opportunities. I'll give you another fact. If you recall back in 2008, when we had the financial market collapse and everybody was very, very worried, and we should have been, because literally the capital flow froze. And if you recall back then, banks weren't able to lend, and it was a very, very, very difficult situation because of the mortgage markets collapsing and the amount of capital that was tied up in those. I come back to my statistic that I gave you 10 minutes ago about the committed capital. In today's market, there is more capital that if that same 2008 situation occurred again today, there would be no freezing of any capital markets. There is more than enough money to even get us through that again today. And by the Fed's own estimation, there is not a single bank in the United States that is on the brink of collapse or on the brink of freezing, even as a result of what's going on in the markets today. It doesn't mean that your local banker is eager to go lend a whole lot of money willy-nilly. But what I'm saying is through the banks and through other forms of capital that are available today, if you have a way to grow and if you have a way to take advantage in the market of something that wasn't there before that allows you to build things like a customer base, competitive position, and real growth potential, there is money in the market to be able to do that, bar none. Then what I would show you on the right-hand side, and then I'll be quiet for a minute because I'm sure some might have questions. Each potential buyer then will come in and actually look at the value that exists in your business and say, can I get revenue or cost synergies as a result of what you do? Or can I build on geographic or market coverage? The example of the deal that we closed last night in Frederick that I would mention to you was a very large private equity group that did not have the particular service offering and customer base that this group in Frederick did. And it turned out that they are the second largest service provider of the service that they provide in the United States. And so this large company in Chicago was looking to go into that, saw the revenue and cost synergies and the market coverage pickup by making this acquisition, and actually paid a premium during COVID to be able to buy that because they knew it would give them strategic position longer term and win-win for everybody as it works out. So the point that I would make to you is valuation is not a simple, oh, let me just look at your financial statement, let me apply a really quick multiple to it, and therefore let me go out and do something. It really does involve all of these aspects. So when I showed you on the previous slide, okay, why isn't it, there we go, hold on. Down here, the 9.4 times EBITDA in the US market, that's made up of businesses that might be trading at 4 to 5 times, as well as businesses that are trading at 20. And what I can tell you is that it really is a unique opportunity today. For example, there is a very large buying opportunity going on in the food component manufacturing space, where small companies, and I do mean small companies, are actually being bid on and bought for as much as 20 times their annual cash flow today, even in COVID. And we talk to those buyers on a daily basis, looking for companies to have us introduce them to. So it really is unique. It's a big puzzle piece game, as you can see here. It's not something that is easily understood, but if you work with somebody to help you to see all of these pieces relative to your situation, is where you can then focus on those 1, 2, or 3 things that could really help you to drive value in, say, the short term, the next couple of years, whatever you're planning for, whatever you're looking to do. And it really is the opportune time right now in this changing world to be able to capitalize on areas of the market that aren't being capitalized on. So with that, I'll stop for a second and see if anybody has any questions.
Dan, Brunson, any questions? Adam? Just throwing out names there. Robbie?
think they're all asleep, Larry.
Yeah, no. I'm listening. I enjoy this. I do a lot of different kinds of investments. So everything you're saying, it seems like, it's going to be changing and we don't know when things are going to go back to normal and what normal is going to look like. So my personal opinion is that a lot of these companies that are going belly up, they could be because they have too many people going in and they rely on that kind of service. Like, let's say I had a business and all I did was birthday parties. Obviously right now I'd be looking pretty bad. But I think the key thing that I'm a financial guy and I enjoy finance. I enjoy numbers. Numbers never lie, I think. I think these companies haven't saved money. I think they spent way above what they're worth or what they bring in. So what kind of examples can you give us from the small business that we have and we're still moving forward? What kinds of things should we be trying to strategize or be thinking of? Because after COVID is over, just like, the Spanish flu and every other thing that's happened, we need to be able to be smart to continue that business because competition will start back up again.
That's right.
I don't know if I explained myself well. Thank you. Over.
No, you did. And you've made a very valid point. I'm going to approach it a little bit differently and tell you that there are many businesses that have a very, very high cost base and a large capital base that they need to overcome, which does not traditionally allow for large margins. And you're right, a lot of people didn't save and didn't store up in preparing for what's going on now. But if you have a large plant with lots of capital that requires lots of debt payments, and you can't make money off of that machinery, and you can't leverage that machinery quickly, you are correct, you're in trouble. And so if you look at things like hotels, airplanes, cruise ships, I can take you that and you can go, you're right, what am I going to use an airplane for other than to fly? What am I going to use a cruise ship for? And those have big payments that go with that, and those are very difficult. But I will also tell you, there was a really great story in the Central Pennsylvania Business Journal not too long after COVID hit about a family-owned tour operator. They owned buses that took people in and around Pennsylvania to Atlantic City, to New York City, where they were running bus operations. And it, of course, all came to a grinding halt. And what they realized was each night they were having to clean those buses and bring them back to a standard so the next day they could be used. And they had cleaning product out the wazoo in their maintenance facilities, and immediately realized the buses weren't going to have any use for a long period of time. And they actually opened and created a cleaning business for industrial business sites. Because of the COVID, they were going to need to be cleaned, and pivoted and immediately became a cleaning company as a result of the fact that that was a component piece of what they did anyway. And now they went to the market where there was a gap, started to provide it, and people bought into it and they took off. So it really is a matter of looking at what you have and that's to my point of what you can do. If you have a large printing press and all it can do is print paper, you're right. You're not going to be able to take that and make hamburgers on the side of the road. But your employees, your customers, and you're listening to what they might need and looking at what you might be able to do, even though you may not have done that before, might very well create that link that allows you to create longer term value going forward. And I know that's a very general answer, but without a specific to a specific company. But you're right. There are many that are going to go bankrupt as a result of this because they can't pivot. But those of you that can, it's going to be very intriguing to see how you think about that. And did you really take advantage of those things that you could do differently and really try to create something beyond that, utilizing your customer base, utilizing your prospect base because they already know you and trust you, is where I think the real long-term value opportunity exists in the market today. one of the articles that and I've had the fortune of having a published column in a couple of major newspapers. And one of them that I was writing about through the beginning of COVID was what I call a nationalistic shift in supply chain. If you look at even the most of the mundane things that are required to go into how a final product gets produced, much and many of that came from overseas, and that was crimped. Your ability to fill a void in any of those supply chains based on your abilities, the things that you have, the competencies that you have, is incredible. And I would point you, if you're interested, that there is a YouTube video with the historic economist Milton Friedman referencing an essay that was written in the 1950s by a gentleman by the last name of Reed called I Pencil, Pencil. And what he talks about is the simplicity of a pencil, but that it's actually a very difficult tool to build because no one company can do it. And when you really break it down and start looking at so many of the things that we do, it really does make you wonder, if this was being provided from somewhere that can't continue to provide it, can I provide that opportunity? That could be in construction, as I heard some of you are in, that could be in services, but those types of things that couldn't be provided any longer really do create an opportunity for all of us to think out of the box.
Okay, any other
Thank you,
questions?
Chris, you answered my question.
And again, I know I'm not specific and I have no idea what business you're thinking about, but I would welcome the opportunity to chat with you about it. This is what I'm really spending so much time with entrepreneurs now, is helping them think about, what else could I do? What else could I do that could actually generate greater value for me in the long run and actually make me more stable in the future than I even might be today?
I have a question. Like Dave and Julie, you're in the electrical components. Is that correct? Must have got disconnected.
Should I go forward, Larry?
Yeah, go ahead. I was just asking if they had seen a shift in what they were providing, you know, based on, were they shifting their industry to other components? So.
Hey, Larry, I don't know if it's a question, but it's a statement.
Okay.
So I'm also involved in a chiropractic franchise, and believe it or not, we're looking at locations now, because these lease spaces, obviously these real estate owners are trying to make sure they hold on to the tenants that they have in the retail environment, but then also they're giving in to a lot of things that they wouldn't give in to before. We're putting in COVID language, we're asking for more TI dollars, and actually they're giving us better rents right now. And then we're also leveraging and getting more, a loan based on, getting more locations and going after it right now based on the cost of getting money. So it's definitely, you can look at it in a different way and see that there's opportunities amongst this craziness.
That's a great example, but you had to step back and actually go have those conversations with the landlords and not make the assumption that it was the way it was before. And I applaud the entrepreneurialism that you just highlighted.
Yeah. It's been great.
It's awesome. Congratulations.
Thank you. Thank you.
Okay, let's keep moving then.
Let's keep going. So let me give you another story to help you to think about just how sometimes this piece over here and the industry and the changes could really occur. Ta-da, Purell. When this all happened, you could have gone in and bought Purell in any store, any gas station for nothing. what did it all of a sudden, what was the value of Purell 2 weeks after COVID hit? Through the roof, right? And
Absolutely.
it's as simple as something that we took for granted became incredibly valuable for no other purpose than something outside of its control. I'm sorry, Larry, you were going to say something.
No, I was just saying there were so many companies that went out of the liquor business and started going into the sanitizer business, simply for the fact that, you know, Purell value went up, but they couldn't get it.
Now, here's an interesting fact about Purell, and if I get it not exactly right and one of you has it better, I welcome your feedback. But because it talks about the fact that it can kill these germs, it is actually a regulated product. It is not like, hey, let's all go put a bunch of alcohol together and put some aloe in a bottle and we can sell it. It actually has to go through a federal regulatory process. And what you're seeing even now is the feds are coming out and letting you know that there are many Me Too products on the market today that are actually detrimental to your health. And the concept of Purell and the people that own it have actually, just from a value standpoint, gone through the roof. So what does that really mean? And that, my point to that is this: there are many elements of valuation that are going to absolutely be out of your control. And you have to be aware of that when you go back to the slide that I gave you here, that you can't control everything. But the things that I'll highlight to you, like I indicated, are the capital markets conditions. And whether it's public markets or availability of debt, and as I indicated, that committed capital, nobody on this call can create what's going to actually happen in those capital markets. But what we can do relative to Mr. Cooper's comments, where we can take advantage where those conditions work to our favor and understand those as we go forward. And part of really the reason for this slide and these three pieces that I'm going to highlight to you, it's really you educating yourselves as these relate to your business. So it will allow you to consistently ascertain where they stand as you're making decisions so that you don't get caught flat-footed. So the capital markets, the first place that probably all of you have some connection is your banker. And in talking to your bankers and understanding what they can tell you at this point is truly and ultimately critical, so that if you were to find lease space to be able to go into chiropractic sites and you're going to need money, it's better to know if you can have it or not have it before you go negotiate with all of those real estate landlords and trying to make the best lease deals that you can. What I will tell you is the banks are in tremendous flux right now because the PPP loans came through and because no bank wants to be seen right now as shutting somebody down. Many banks are actually allowing distressed businesses the opportunity to continue to operate without making payments. And that music is going to stop here shortly. Many of the bankers that we talk to and the bankers that we speak with are more the credit officers, not the people that are actually out making loans. And what they're letting us know is that probably at the beginning of the third quarter is when many businesses that are having problems right now and struggling are going to really have the clamps put down. But that's going to create an opportunity possibly for some of you to maybe even come in and buy some of them because their values are going to be dramatically decreased. And it's because of their inability to take advantage of things that you might have could very well be a valuation opportunity for you, because you bringing that opportunity on board will actually be accretive to your overall value. The real other key here thing as well, as we point out, is the industry conditions and the market opportunities like one I just created for you, is that what's actually going on in the industries that you're operating in are the ones that you could be operating in, and where are those opportunities? As I said, supply chains have been dramatically affected. Even if you were to go on Amazon today and try to buy something that heretofore you might have gotten overnight, you might see in that they say supplies may be limited and delivery might be 30 days out. That, while struggling if you want that product tomorrow in your kitchen, is actually an opportunity for an entrepreneur to figure out, why is that supply crimped? Is there real demand there that's not able to be met? And can I actually create a business out of it, or a segment of a business out of it, and where that goes? And that goes to our second bullet point there around innovation, where we actually saw there's a business here in Maryland called, I think it's called Lionswood, and they manufactured furniture for large institutional clients around the United States. And they're actually now producing plexiglass shields for cubicles, for restaurants, and for other places to allow them to remain open, where they had to shift because nobody was providing plexiglass shields, but they're now doing it and actually getting very, very large national contracts as a result. And then the buyer priorities. This is really a key in an area where we spend most of our time. Our team really is out talking to buyers every day, all day, trying to understand what they want, and what they want today may not have been what they wanted before. Back to my point, where there are crimps and there are changes, many of these people are trying to take advantage of that opportunity. The deal we just closed in Frederick is an example. And it's really understanding that. And the problem is, many of these private equity groups aren't retail names. You're not going to see them. These are in office buildings with people that just manage a lot of money and know how to do deals. And so it's really knowing where those opportunities are, what those people are actually looking for, actually helps you to understand those areas to create priorities around. If you're thinking about selling in any near time, that could be 1, 2, 3, 4 years from now, because they're going to drive and tell you what they're going to want. And those are the things that you can then start to build upon to actually turn this away from being valuation outside of your control and actually making it valuation within your control, by simply knowing what somebody wants and providing them what they want. It's no different than the kid that sells lemonade on the side of the road. If there are a bunch of workers that are doing road work and they don't have access to water, that lemonade stand's a pretty valuable thing. But if it's right next to a big 7-Eleven, yeah, that might not be as easy to sell lemonade. Larry, any questions?
Yeah, we have a couple of people involved in the construction industry, or roofing industry, things of this nature. And when you look at industry conditions and market opportunities, how, when you say cyclically recession resistant, how do you store up, I guess, how do you shore up the construction side of things to be resistant, to a recession?
Well, I guess it also depends on what segments that you're operating in. If you're operating in, say, again, the hotel space right now, you're in trouble because hotels have been crimped dramatically. But grocery stores and consumer product outlets are still doing very, very well. Doctors' offices are going to continue to do well because we're going to need that kind of healthcare. But it's going to go back to that consumer staple concept versus the discretionary spend. And those areas where staple are important are huge. Have any of you tried to go to a Home Depot or a Lowe's lately? And are you seeing the crowds and the depletion of things on the shelves in the last 90 days?
Yes.
How many people are now at home and realizing, oh my gosh, I need to get this fixed. I need to get this fixed. And I would almost go to you and say, the number one thing I hear from so many people, whether you're building a home or whatever, is I can't find a good contractor to do that work.
Right.
Well, again, I've got people who are skilled tradespeople. I was going to say tradesmen, but I don't want to be sexist. I have skilled tradespeople. What else could they do in a way that I could provide a different level of service to go to that next level?
Mm.
And even think about, and again, I'm going to use more of a retail angle, but give you an idea of how that has expanded. Look at some of the companies that started off either as plumbing or electrical or roofing. A company as simple as, I don't know, a BGE home service, right, Larry?
Right.
And think about, oh, I can now come in and be your one-stop shop to do all the things that you need in your home. I could be the one-stop shop to do all the things that you need in your business. Because of the scramble and because of what's gone on, people are still in need of things that might have flown below the radar. And your ability to lever skilled tradespeople, even in a way that you may not have before, may actually create bigger and better opportunities for your business going forward.
Wow. Well, that answers the question. And the other thing I think you mentioned before is that we have to have a management staff that is willing to make some changes. We may have to change from a residential to more of a commercial environment, or from a commercial to a residential, or from a restaurant to a hotel. So being able to make those changes are important.
And that really is the critical, I call it a pivot. But again, I go back to what is it that we can do and we can do well, your competencies. What is it that the market may need? And what is it I can provide that goes back and gives me the cash flow that I need and the long-term viability and scalability that I can take advantage of, because the market is not providing it. Right. And so I would actually tell you that there are many markets, whether it's roofing or electrical or construction, that don't have enough skilled tradespeople to be able to do that. And I think part of that reality as well is the ability to have skilled tradespeople that show up on jobs. And if you can build something that is truly unique and do that, it's amazing what you could possibly do going forward. Many of you might be, are there people on the phone today that do plumbing?
I don't think so.
I just want to use as an example, but I also don't want to step on anybody's toes.
No, I don't think so.
Are all of you familiar with the company Len the Plumber?
Yes.
Yeah.
Yeah, it's common, right? You see their trucks everywhere, et cetera. Do you know they just sold?
No.
Okay, so I'm not talking out of school. They just sold at the beginning of the year. And the gentleman that started the business, his name is actually Len. And really what they did, and I'll give you, it's a really an interesting story. Instead of just saying, okay, I know how to fix pipes, toilets, and sinks, he actually brought in an individual with public company experience to come in and run the company. And they actually built an entire process-oriented situation, from call center to inventory management to truck management, so that when the plumber went out that day in his or her truck, there was a rhymed reason as to what they were going to do, what was on the truck, and how efficient they could be. And they actually created a incredibly robust cash flow machine, and then started studying geographic markets that could actually use and need plumbing. Instead of just saying, okay, I'm going to go to Hagerstown and be a plumber, they would actually go in and look and say, I know exactly what areas of Hagerstown to go into because they're underserved, marketed heavily there, and were able to be market dominant. And as a result, over the 3 years prior to their selling, they actually built value in that enterprise far beyond anything that had been there before. And when they went to market, they were, as we like to say, the real pretty person at the dance, and everybody wanted to be on their dance card. And they actually created a very, very, very successful transaction, both for their employees going forward, as well as for the shareholders that got out. So I use that as an example that it wasn't just, oh, we're plumbers and we know how to use pipe wrenches, but they actually got into the nuts and bolts of the business, really understood their clients better, and built a process-driven organization where others around them weren't, and thus exceeded valuation expectations for themselves and ultimately achieved something that was really outstanding.
So yeah, we've that's a great story there. So we have a couple people on the phone I know that are implementing, you know, a lot of processes. I think, you know, the great thing is to focus on the cash flow and the cash machine, the service agreements, things of this nature that brings value to construction. So
absolutely. And so I just used that as an interesting example because I had insight into it, and I haven't given anything away other than we can all do exactly what they did, and it definitely works even in a business like plumbing.
okay, great.
So let me take you to the next. So who's this guy on the screen?
This is Roby. Yeah, I'm sorry. I was using the raise and lower hand, didn't work, so I figured I'd just jump in. I apologize for being rude.
No, please do.
A question for you, Chris. Thank you. A question for you, Chris. So is part of your company also able to help other companies sell their companies? Because right now, you know, if you're trying to buy, it's great. If you're trying to sell, if it's something that you've got demand or you got the right property in the right location, that could also be of value. Is that something that you guys both or you do, Chris, over?
So let me be clear. When you say our business is the group that I built sells businesses. That's what we do. I don't sell real estate.
Okay, so we should have another discussion. Okay, so I'd like to have another discussion with you or Larry, however it works, and maybe with Tony after this presentation. Over.
Again, I'd love the opportunity to talk to any of you, but again, what I was trying to do today was be more of an educator, not trying to sell you on something. But yeah, our team has now done a little over 800 sale engagements since we founded the practice.
Yeah, that's fantastic. I love the rule of supply and demand. And as demand is high and supply is low, I think is the best time to take opportunities to sell sometimes. So yeah, we'll definitely talk. Thank you.
Right. So, you know, my approach to this though is you've got to understand the strategy first. It's not just I'm going to go wave a flag and hope somebody drives by like the mail truck and picks up my mail and gives me a check. So to that point, can you all see, or if you look at the next slide, who is this gentleman that's on the slide?
Oh, guys.
Who is this?
It's Mahomes.
It's Patrick Mahomes. Young man, right? Not even 30 years old. Didn't go to a powerhouse football school, went to, you know, one of the secondary schools down in Texas. And he's really made a name for himself in the NFL. But what was just announced about a week ago? What did Mr. Mahomes pull off?
Like $500 million contract.
$500 million contract to throw a football. And so you ask yourself, how does that happen? Right? Geez, I should have learned how to throw a football better when I was younger. And what I would tell you is that in the business of building value, there really is a process to how that happens. And Mr. Mahomes' agent did just that. He actually ran a process no different than we as investment bankers run processes. And that's where really all the concept of where the things that you do day to day to build value really come into play. So the gentleman that was just asking me the questions, it's a supply and demand game. You've got to be able, like fishing, right? You've got to be able to put the bait in front of the fish that wants that bait at that time and is willing to give you what you're looking for. And it's that ability to position yourself and to make people aware of what it is that you have and what it is that you are looking for to make that happen. Now, the point that I would make to you here, and I will tell you this as one that does this for a living and has generated the high blood pressure and gray hair that I have as a result of it, is at the end of the day, most business owners, when they ultimately get down to achieving that ultimate value time, when somebody actually writes them a check, the greatest decision they have to make is usually 95% of the time no longer about economic value. It's about some other component piece of their business. It could be their customers, it could be reputation, it could be their employees, but it's not about the amount of money that they're going to get. And so one of the key pieces that I would tell you as you think through this, what is it that you're ultimately looking for and what objectives are you trying to achieve, whereby economic value is one variable in that, and it's the understanding of all the others that allows you to bring your business to achieve its value in the maximized way, because you've articulated it appropriately to the market and found the right people that see the world the same way that you do in making that happen. And I think so many people think, well, gee, I have this much cash flow, so everybody's going to come running to me. But you may have aspects of the business that you've built that make it very difficult for some people to buy, and others might just think it was the greatest thing since sliced bread. And so really running a process and making sure that you're talking to the right people are how you make that happen. And so the slide that we have here in front of you talks about your ability to maximize value, and that's far beyond just economics. It increases your likelihood of actually closing. It allows it to be timely because, ladies and gentlemen, these processes don't happen overnight. Yes, some people it does, but you know what? How many of you won the lottery here lately? Some of us hit that ticket, some of us don't. It also allows you to minimize all the distractions in your life and your world, because you still have a business to run and families to deal with. And it also closes with the minimal amount of liabilities that could come back against you as part of that process. So the reason I highlighted Mahomes and the reason so many of these athletes use agents is their ability to interact with the market, understand what different people want, what different people are willing to sacrifice, and then what their clients actually want, and finding that clearinghouse in that place where objective meets objective. That's the real key to this, because on paper, you might be worth a whole lot of money, but if you can't actually turn that into a transaction, it doesn't matter, it's just paper. So before I were to go forward, does anybody have questions on this? Because I'm going to spend just a little bit more time on it as we go to the next slide.
We do have a question from Dan Lazinski. Dan, you want to unmute yourself, or I can do that for you?
I didn't finish typing before I had sent Lanny.
Okay, go ahead. Dan? Oh.
Go ahead and continue. I'm gonna send them to you, Larry.
Okay, well, you can go ahead and ask Chris now. I know that if you'd like, go ahead.
Oh, these are kind of unrelated. I got three of them. One, market sentiment towards startups these days. Second is any thoughts on the work from home versus returning to the office scenario. And third, your thoughts on, are people actually going to move from the city outside of the city, and how that might impact businesses?
So I will tell you that there is still a dramatic pool of people and money that are aggressively backing and supporting startups. It's taking a little different approach than traditionally it occurred, what I will tell you is it really is a tale of two cities. If you are on the West Coast, the mentality of startups is looked very differently than the East Coast. And I'm being very general in my statement. The West Coast is willing to make bets on things and fail and fail and fail because they know when they hit the win, it will really pay off. The East Coast tends to want more surety and unwilling to accept the level of fail that the West Coast is willing to accept. So what we're seeing in the startup communities of the West Coast aren't quite the same as what we're seeing here on the East Coast. Now, that is a general statement. There are some areas of startup. I'll use cybersecurity as an example. There are many people that are very well poised and versed in the areas of cybersecurity where they see a technology that heretofore had not been there, are willing to jump on it without its proof of concept. But for the most part, most people are looking for a little bit of traction, a little bit of market acceptance, and a little bit of competitive positioning. And so what that has created on the East Coast is more of the need to use friends and family and others to help you to get that first seed off the ground before you can get more of what I call the institutional capital than on the West Coast. But there is no lack of desired for startups being supported in the market today, and particularly in and around information technology, or in the case of, think about it, if somebody came up with a vaccine for COVID, even if you were a startup, you wouldn't have a problem. But it's that concept of your ability to be scaled quickly and incorporated quickly is huge. In the work from home, I really do believe that we're going to see more and more work from home than we've ever seen. And I think it's going to be, somebody had talked about the normal. I think what we learned before, we're not going to see again. What we had before is in the past. What we're going to have in the future is still to be formed. And you're right, to weave in your third question, I think the concept of urban centers are going to become more difficult to support. And whether that is from a cost standpoint, whether that's from an attraction standpoint, I think you're going to see more and more of a flight to outside of cities and less of a flight into cities that we had seen previously. Real estate is going to shift dramatically, and the values there are going to be much easier outside of the cities. And because of the work from home environment, let's just use, for example, what we're doing here today. The fact that we're able to have this discussion amongst 10 of us before might have happened in Larry's office. Now we're all very accepting of looking at a screen. And none of you know, I could be sitting in Singapore right now doing this meeting with you, and you would have no idea. And so what we're seeing is, I'm not, by the way, but what we're seeing is that the ability to lever technology and its ability to create connectivity will continue to move forward. And there are many people that are finding that to happen. Now, manufacturing is still going to have to happen in the building. And it's going to then be, where are my employees going to be and who is willing to work in the environment that I'm willing to offer is going to be critical. Back to our construction folks and tradesmen, if you can't bring in people that have the skill to do the work that you need, that's going to be a dramatic impact. Where if you have technology, you can be hiring people anywhere and you can employ them on work anywhere, because this concept of this little machine that has a camera and a screen is going to allow for tremendous flexibility within the employee base. And I think for some, that's going to be an opportunity, and for others, that's going to be a struggle. So as I would wrap all of that together, that's what we're actually seeing in the market right now. And the people that are actually doing deals are actually doing them without even coming out and seeing the business, and in many cases, never having met the owner face to face. The deal we did and closed last night, the owner that sold has still not met the ultimate boss and the buyer face to face. It was all done via a screen. Larry, I'm sorry, did you have a question? I know we're
No.
also going to run out of time here.
Nope, I was just looking at the time. So
But those are all great questions.
we'll have time. If you want to stick around after the program, we will certainly take some questions if that's okay with you, Chris.
Absolutely.
Okay.
If people want answers, I love doing this.
All right.
So what I would tell you, a couple things that you really need to think about if you were going to enter into an M&A process or any kind of a process where you're going to try to attract money. Growth is paramount. So I'm going to start that right up at the top. This is where you really need to be thinking about who is my customer, how am I communicating with them, and how do I continue to bring them value where they're continuing to give me money for what I do. And I would tell you that many folks struggle with this. And back to what we had just talked about previously, where there might be growth opportunities, this is where bringing in somebody that does this and helps you to really think about what it is you're doing in that unpassionate, unbiased way is a great way for you to maybe see something that you had a blind spot to and hadn't really thought about that you could tweak or change, because this is number one in the buyer community right now. Can I grow? Nobody's looking for stagnant. Growth is it. In your financial and operational controls, back to even what I had highlighted with Len the plumber, they put in operational controls, which was how do I run my trucks? Where do I send them, etc. If you were to all look, and I don't know that any of you know this, have you ever followed a UPS truck on their delivery? What's unique about a UPS truck when they do a delivery? Anybody know?
Right turns only.
They never get out of the left side of the truck. That driver never gets out of the left side. And guess what? If you go into a UPS truck with all the boxes and packages in that big brown van, guess what the top of that van is? It's see-through. That's how they have light to be able to see everything in there. And sometimes it's the little things like that. What are those things in your business that you can create as controls that make people more efficient, that make your employees more efficient, that make your customers happier, can really lead to a tremendous amount of opportunity. Your ability to forecast what tomorrow might be with some level of certainty is huge. And what I encourage people to do, even if you're doing it amongst yourselves, are go through a process of forecasting, even if it's on a monthly basis, what you think might happen in the next month, the next quarter, the next 6 months, or the next year, and put it in writing, date it, and stick it in a file folder. A month later, a quarter later, go back and look, how well did I do? And if you get in the process of doing that and you keep those historically and you hone your ability to forecast, you'd be amazed when it comes time to sell that you can say, yes, I don't have a formal forecasting, but I've been doing this for 3 years. And let me show you how well I forecast. So when I tell you, Mr. or Mrs. Buyer, that this is what my business is going to do next year, you can trust that I'm probably pretty good at it, because let me show you what I've done over the last 3 years. And it's amazing, amazing how you can create more value in the buyer's minds just by something as simple as that. As Larry had highlighted a couple times, your management team and your employee base really are huge for you. Giving them thinking like an owner, willing to make pivots, doing things differently, and being willing to do it with a smile is incredible what it can do to the entire organization going forward and how things can actually get done. And then your technology. Can you find ways to take technology to leverage it? And technology doesn't have to be, oh, my plumbers are using technology to figure that out. In Len the plumber's case, it was just the technology of how many stops can they make in a day and what do I put on their trucks to make sure that they don't miss an opportunity while they're in the field. That's technology. And so, or it could be, how do I use call centers to schedule my jobs? And it's those little things that actually enable you to create value. And those are the things that you can be doing today and you need to do long before you try to tell somebody, hey, I'm ready to go. I would have done this if I could. You could do it, so therefore you should pay me for it. That doesn't happen. People will pay you for what you have done and for their ability to take what you have done to the next level. They're not going to pay you for what they still have to do in order to be successful. So just in the interest of time, I'll leave you with this slide, and we could spend a lot of time on it. There are many ways for you to ultimately achieve value when you do decide to sell. Whether it's selling to your employees or your family, we'll call that an internal sale. Whether it's to a private equity institution, which we'll call a recapitalization. An ESOP, which is an employee stock ownership plan where you sell to your employees, or you actually go out and sell to somebody who's very strategic and can take the business because they're already in that business. Your liquidity at close, your risk of actually getting it done, the economic value, the building of your leadership incentives, and how you keep your company culture should all then dictate what process you might go through and what is the best way to do that. And I go back to my slide of a few ago, which is what are the objectives that you're actually looking for? And the point that I make to you here is the fact of value in economics is only going to be a part of what you're looking at, and that's the enterprise valuation. There are so many other things that you have to think about. And so this slide is just letting you know that there are many different partners that you could think about, and your ability to educate yourself on that earlier rather than later is a smart way to go about building the value that you're looking to build in your organization. Any questions? Because Larry, I know we're out of time.
We are. I want to make a comment. I think that, you know, after going through a sale, I can tell you that if I wish I had prepared for it earlier. I wish, you know, we had talked to Chris, because even if you're thinking 3 to 5 years down the road, it's not too soon to have somebody take a look at your company in a unbiased situation and just, you know, have a conversation. Because if you wait until you're ready to go and pull the trigger, it's too late if you need to make changes.
And that is a true statement. I can tell you, we've worked with companies as long as 10 years, just advising them before they were to do something. So there is a way for you to do this. And I would encourage you to surround yourself with people that understand what you might not, to help you to open your eyes to things you may not normally see. You ultimately have to make the decisions. You ultimately have to make the call. But what we find is the more educated the entrepreneur, the better the process, the better of the valuation build that goes into how they build their business, and the greater odds of achieving your objectives when that time comes. It's all correlated. It's purely statistical at that point.
Well, it's 2:35. We want to thank you for attending. I'm going to, a little information. I'll be sending Chris's email to you, and you can reach out. Chris will also have a list of people that attended. If you have any questions, you want to stick around. We had a couple people that had to go, but want to have follow up with Chris. Please, by all means, stay around for a couple minutes, and otherwise, we thank you for taking this time. And Chris, thank you so much. I think it was extremely valuable information today about our value is just not based on revenue and not solely on earnings, but, we're looking at, thinking out of the box and our leadership team. So I really appreciate you spending the time with us today.
I appreciate the opportunity. Thank you.
All right, so we will stop. So what we will, Chris, if you would stop sharing and we can go back and see if anybody wants to have a conversation there. Okay, is there anybody who would like to ask Chris a question now? See, John Francis joined us. How are you, John?
I'm doing well.
Good. Good. COVID-free now?
Say it again?
I said you're COVID-free, right?
Yes, sir.
Hey, John has a large roofing company in Virginia.
Okay. Are there any just general questions I can answer for you? Even if it's, hey, if I knew that, that would just be interesting data.
Anyone at all? Okay. Make sure I unmute all.
I'd like to know that the gentleman, a selfish question. This is John. Selfish question would be is that Len the plumber that helped him, those 3 years to really put all the best practices into place to leverage, a great buyout. It sounds like. I'd love to chat with that gentleman.
Here's what I'll offer offline. I can reach out to Jeff, and I haven't spoken to him probably in about probably since the beginning of the COVID event. I can check and see what his willingness would be to do that. What I will tell you is he is an engaging guy, and I'd be happy to try to broker that so you guys could go have that conversation.
That would be wonderful. Thank you very much.
You're very, very welcome.
By the way, very, very interesting information. I was only able to jump on the last half. Is this going to be available via web?
We are recording it, and I will send you the link, John.
Nah, that's beautiful. And I'm a big guy. I love networking, so I'd love to pick your brain even more, take you to lunch or dinner or whatever. A lot of great information. I appreciate your time.
He likes good wine. He likes good wine.
Well, I have plenty of that.
Yeah. Van Sant and I have a common crutch in our world, right? No, but John, even if it's, a phone call, this is the part of now in my career that I really enjoy. It's being, you didn't hear that, but I taught graduate school for 20 years in addition to this. And I love this, being able to help people understand something that they may not have before. If it allows them to be more successful in whatever it is you're trying to do, I get a kick out of it. I actually enjoy it. So I'd love to be able to do that. I love these things.
Yeah, amen. Good, and that is an awesome attitude. Not a lot of people have that.
You have to. That. No, you have to have that. It's the only way the world goes forward.
Yeah.
Right.
Point. Wonderful.
Yeah.
I'd love to connect with you, and if you like good red wine, I got plenty of that.
Right. Anyone else? All right. Well, thank you all for attending. I hope I know you found value and good information in this. And Chris, once again, thank you. Until I get that bottle of wine to you for doing this. Thank you so much.
You guys, Larry, just let me know if there's anybody I should connect with, and I'm sure
I have a couple of people, so I'm gonna call you when we're done.
Okay, perfect. Thanks, my friend.
All right.
See ya.
Thank you, everyone. Have a great day.